5-minute tax guides from your 5-minute tax guy. Short lessons to help you navigate the treacherous, hazardous, and totally unpredictable U.S. federal tax code. Okay, I've got to get something off my chest right now before we go any further. Many of you have been telling me, 5-minute tax guy, how come your videos are 8, 9, 10 minutes long? I thought you were the 5-minute tax guy. Listen, when I say that a video is 5 minutes long, what I mean is it's between 5 and 10 minutes long. I thought everybody understood that. You can't explain the U.S. federal tax code in 5 minutes. The U.S. federal tax code is over 75,000 pages long. Take my word for it, I Googled it. And that was in 2014, where the new Tax Cuts and Jobs Act that Congress passed in December, effective for the 2018 tax year, I guesstimate that page count probably went up about 10,000 pages. By now it's probably about a jillion pages long. So if I take an extra 3, 4, or 5 minutes to try to explain it, I think that it's perfectly justified, don't you think? Well, that little rant added another minute to my video. Happy now? 2019 tax changes. In December of 2017, Congress passed the new Tax Cuts and Jobs Act, which dramatically changed many of the tax provisions that we, as individual taxpayers, are subject to when preparing and filing our individual tax returns. In this video, to help you prepare for the filing of your 2018 tax return, which you will file in 2019, I will be covering some of the most notable and relevant changes made by the TCJA. Exemptions. In my opinion, one of the most sweeping changes made by the TCJA is the suspension of the personal and dependent exemption amounts. In the past year, a taxpayer was allowed to deduct from their income an amount for each person claimed on their tax return. For 2017, this amount was $4,150. This meant, for example, that if the taxpayer was filing a joint return with their spouse and the couple was claiming their 3 children, they got to deduct $20,750 from their adjusted gross income on their 2017 tax return. That's 5 exemptions at $4,150 per exemption. For tax years 2018 through 2025, this exemption amount has been suspended, or in other words, reduced to 0. This means that you no longer will receive a deduction from your income for each person listed on your return. For a taxpayer with a large family, this loss of exemptions could be a significant amount, considering the loss of the former deduction of $4,150 per person. Under this new provision, the taxable income of a couple with 6 children will be $33,200 higher than under the previous law. That's 8 exemptions at $4,150 each, which equals $33,200. But don't panic just yet. Congress taketh away with one hand, but giveth with the other, which is very uncharacteristic of the U.S. Congress. Usually they're just taking away and leaving out the giving back part. But after all, our kindly Uncle Donald, remember how they used to call Stalin Uncle Joe, did promise us that we would have more money in our paychecks, right? Standard deduction. So to start with, your standard deduction amount beginning in 2018 tax year will be almost doubled. What's that you say? You've always itemized your deductions? Well, too bad, sucker. Just kidding. Maybe we can still bring a smile to your face. Stay tuned for more good news. Below are the standard deduction amounts for 2017 and 2018. The additional amount is for an individual who is either blind or 65 or over. If you are 65 or over and blind, you can claim 2 additional amounts. I'll just give you a few moments to let you look over the chart. Special considerations. The following provisions did not change from 2017. Dependent. The standard deduction amount for a dependent or someone who is claimed on another tax return is generally limited to the greater of $1,050 or their earned income plus $350, but no more than the normal standard deduction amount for their filing status. married filing separate. If you're filing married filing separate and your spouse itemizes on their tax return, then you must itemize on your tax return, even if your standard deduction would be greater. That's just a fancy way of saying your standard deduction is 0. Child tax credit. Here's that good news I mentioned earlier. This change should bring a smile to your face if you have children to claim on your return. Previously, the amount of the child tax credit was $1,000 per qualifying child. The TCJA raised that amount to $2,000 per qualifying child, and of that amount, $1,400 is refundable, which means that even if you don't have a tax liability, you can still get that money in your pocket. Just to clarify, the child tax credit is actually composed of 2 credits, called the child tax credit, which is non-refundable, and the additional child tax credit, which is refundable. More good news. The new law also substantially increases the income thresholds for the phase-out rule that can reduce or eliminate your CTC due to high income. This means that many more families will fully qualify for the bigger credit. The credit for other dependents. Here's another change that can get you more money in your pocket. Be still, my beating heart. Well, the good news never ends. Oh, I can assure you it does. The new TCJA established a $500 credit for a dependent who is not a qualifying child. That might be your child who is over the age of 17 and therefore doesn't qualify for the child tax credit. Or it could be someone who is unrelated to you, but who's still your dependent under the qualifying relative rules. Maybe that leech of a neighbor who lost his job 3 years ago and has been living with you ever since. This is a non-refundable credit, so it can only be used to reduce a tax liability and cannot be refunded. For more great 5-minute tax guides, check out the other videos in my 5-minute tax guide video series. See the list in the description below this video.